Good morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Let's have a look at some of this data. Last week, the monthly inflation gauge came out in Australia, up around sort of 4.6%, which is lower than the previous month, which is a good thing, but it is still a fairly sticky sort of inflation number at the moment.
It sure is, and that seems to be a common, well, we'll work through the slides this morning, but that seems to be very common across the Western world. There aren't many countries that it's, crashing to the downside.
No. Well, it's come off, obviously, a lot of these developed economies, it's come off significantly,
Yes, it
but
has.
obviously not down to the levels that the central banks want.
Of the 2s and 2.5s.
Yeah, that's right. So, and once again, the Aussie dollar, it's recovered slightly from last week, around that 64.3 mark. A little bit of positivity last week in the local market around those inflation numbers, leading to a consensus that the Aussie interest rates done, or done for the time being. I think it's probably a fairer way of putting it.
Yes, I think so. We've got a number of central banks meeting this week. You've got the Swiss, Bank of Japan, UK, and the Fed, of course.
Yeah.
So how that all rolls, we'll find out in the next, say, 48 hours. We'll get a really good indication, and interesting to watch the Swiss up there, because that and the pound have been the two hottest currencies this year. And the Fed, of course, do they sit on their hands, or they push it out to November for the next rate rise? And it's going to be, I think, dynamic naturally for the volatile FX market.
Yeah, for sure. We also had the GDP numbers out of the UK, 0.5 down. Forecast was only negative 0.2, but it's not a great number, and it'll be interesting in the next quarter. Can they get that back in the green? If not,
we're in recession. Yeah, and building on that, do we see 25 basis points of additional hike this week from the Bank of England?
Yeah, which is the expectation. So,
yes.
And we can look at the pound, just shy of 124 there, so it's coming off a bit. But as you say, it's been a pretty good trade over the last 6 months.
Oh, it's been electric. You have a look where it was when we used to speak last October, and it was at 103, and then it just bounced all the way to 132. It was just boom. And now it's, as you can see, it's off, and maybe there's further softness. We'll just have to see if that 25 basis points is baked into the rate.
Yeah, you would,
or to the price.
Yeah, you would think so, but we'll wait for that decision to come out later this week. Over in the US, CPI came out. Now, interestingly, the standard inflation number was up.
Yeah.
The core CPI number was down.
That's right.
Which is a good thing, obviously, but the market chose to focus on the core CPI this time around.
Strange, that, isn't it?
Yes. So they were obviously it is a good thing that the core CPI is coming down. But as we look at that chart, that's a 2-year chart. So it is coming off, but it is coming off very slowly.
And naturally, what does Fed Chair Powell? The rhetoric coming out, the commentary is going to be closely watched, every single word and phrase. And do they surprise us with a 25 basis point hike? I don't know. I mean, everyone's saying that it's not going to happen, but who knows? All we do know is that we've had a very solid move to the upside with crude oil, up 23 cents on average a day over the last 100 days. So that's really going to start to, I think, tick inflation higher, and that's certainly not what we don't want.
Yeah, for sure. We also had the retail sales out in the US last week, which was once again a positive month, and they've had quite a few months like that. They're not huge numbers by any means, but the economy there it's certainly hanging in there. Yeah,
it is. That's also summer, and you would want those sort of retail sales people out and about more and buying. But yeah, no doubting, you've got to say that. Again, where are we at Christmas? Just got to see whether there's plenty of presents under the tree, or it's going to be a barren tree.
That's right. And finally, we touched on it, the oil, which is just continually trending higher in all markets. Once again, those cuts from the Saudis and the Russians are certainly feeling the pinch now.
Yeah, it's a fine line, and it's really on knife's edge as far as the supply-demand equation. The other side of that, in the last last 2 hours, NYMEX crude has bounced to the upside another $1.40. So it's now sitting at about $92.40. So the price differential between the two benchmarks is now down to $2. And it had a spread there of $5, then to 4, to 3, now we're at 2. What will be interesting will be whether the WTI actually catches Brent in that race to 100.
Yeah. Well, it's certainly closing the gap. There's no doubt about that. That gap was quite a bit wider only a few weeks ago.
That's right.
But you can just see by the chart there, it's clearly a big spike to the upside, and you would sort of think that will continue in the short term at least.
Well, this is the issue we spoke of, before the show started, yourself and I, and we, your comment as far as Saudi and Russia and pushing that out to December. There's no talk. I saw a comment from Vandana Hari, one of the top oil analysts. I'll see her in a week or two up in Singapore, and we're speaking together in Fujairah for Gulf Intelligence over in the UAE. Now, the Saudis have sat on their hands. They're not going to wind that back. So the impact is going to be, if that rolls the way it is, and you've only got to have geopolitical or something happen as far as an outlier, weather or so on, you go into a deficit, then prices are going to ramp up considerably.
Yeah, which is the last thing the central banks want at the moment.
Yeah, exactly. Well, this is the dilemma they face, nearly to the point of stagflation, because you've got to keep on jacking rates up, and you've got weakening demand, not for oil so much, but weakening demand for everything else.
Yeah. So no, it's interesting times, that's for sure. But that's going to have a big impact on the markets in the coming weeks. So
we're going to keep a close eye on that one.
For sure. All right, well, that's another good wrap. So thanks for joining us, Pete.
Oh, it's lovely to be here, Andrew.
We'll see you next week.
Yeah, spring has turned into a bit of summer in Sydney.
It certainly has. Very warm out there, but we'll regroup again next week.
Look forward to seeing you.
And that's the XM.com weekly market update.